Let's take a look at some charts on Ethereum for Brave New Coin. So Ethereum was an ICO, one of the most successful of all time. The Genesis, the pre-mine plus crowd sale, however you want to consider that, still eclipses the block rewards. Interesting. Not really something many people think about or discuss. Not really bullish or bearish, one way or the other, but to see where ETH has gained market share against everything else, very interesting. And definitely one of the most successful ICOs ever, if not the most successful ICO ever. ETH block time's currently 13 seconds. And my first thought regarding hash rate was, are we seeing declines in hash rate on ETH like we are on BTC relative to the China news? And we kind of are, although not to the similar degree. This is 520. That was the all-time high, and it's down slightly since then. Overall, though, hash rate has just mega mooned since 2020, since 2021, January, obviously with price and block rewards plus transaction fees, making miners fat and happy. But overall, hash rate's still incredibly high, and all of this will go by the wayside once ETH switches to proof of stake. Currently, no exact timetable for that. ASICs, meanwhile, still being created. Good for Bitmain for creating something that's going to be bricked fairly shortly, probably. Again, we don't know exactly the date or the timetable for the switchover from proof of work to proof of stake. Dare I say, we don't even know if it'll actually happen. So maybe this is a hedge that ETH won't actually switch to proof of stake ever. Also, these new miners probably playing a role here in some initial covert ASIC mining, because Bitmain loves to use their miners before they sell them. And how great would it be if they unload all these miners at the top after already quadrupling their money mining them? I mean, that's just the best, right? That's the icing on the cake. If you're a business like Bitmain, here's the miner revenue per month, and probably, don't know for sure, but probably May will be on record as the highest miner revenue ever. A lot of this has to do with price appreciation to all-time highs, transaction fees going to all-time highs, but I have a hard time thinking we'll see what we saw in May again. But hey, anything's possible. I just hope, as a user of Ethereum, that gas doesn't go to infinity again. Here's the gas ceiling, and this has to be raised by vote from miners. And you can see we're hitting that ceiling continuously through mid-2020 and 2021. They raised it. We hit the ceiling again, and now we're sort of falling off the ceiling. So I'm just waiting for the day when they vote to lower the gas limit, because that'll happen most likely, as it should. I think block sizes should be dynamic. There's issues with centralization if you keep raising it. There's issues with the chain falling apart if you keep raising it. So by lowering it, it raises fees, most likely, but it keeps the chain intact, prevents it from falling apart. There's still around 5,900 nodes, most of which in the United States and Germany. And it'll be interesting to see how this changes once we go to proof of stake, because we may not see as many nodes in the US and Germany, many of which are probably on cloud mining and Infura, and it'll probably switch to more Asia-based nodes as we're seeing with EOS. That's just my guess. But overall, a very healthy amount of nodes, considering everything that's going on with ETH. It's just hard to know how much of this is Infura cloud mining, because that represents an N of 1, right? That's just a centralization. I can rent space on Infura or Amazon Web Services, but at the end of the day, all those nodes are still one entity. Full node sync size around 7.5 terabytes. That's going to continue to increase over time, and that's also going to play a role in centralization, and nobody cares about this ever until it's a big deal, because nobody thinks about it, right? Everybody loves using dApps and doing all the fun stuff on ETH, but for a full node, everything that's ever done gets archived, right? So there's a history of it. And the issue is, if you ever need that data, that full node data, and very few people have access to the full node because there just probably aren't that many. I don't actually know how many are even on Ethereum. Just like EOS, I don't know how many are on EOS or Ripple. You know, for most coins, I have no clue how many full nodes exist. The ETH people will tell you full nodes don't matter. The pruned nodes or whatever are all that matter. But The reality is full nodes do matter, and as this gets bigger, it will increase centralization. Again, most people don't really care about this stuff because they're having fun right now using Ethereum and making money and creating dApps and all this other stuff. And this won't be a problem until it's a problem. And then it's kind of game over until that gets fixed. But this is the sync nodes, not as big, but also growing. Unique active addresses, or rather unique addresses, continues to just moonshot. Now addresses can never be deleted, but this is a good indicator at showing the strength of sort of new users or new use cases on the chain. And all-time high was 355K. It looks like we had a 300,000 spike. These will spike with volatility as well, but it's not flat, right? It's not plateaued. We're not getting like less than 150,000 per day. It's a very significant increase in uses of the network. Here's the mempool. This is transaction count pending. And you can see when we were maxed out from February to mid-April, just maxed out on the ceiling of gas for a long time. And that pressure got alleviated. Then we had that price volatility spike. Gas went insane again. And now pending transactions down to around 80,000. So if this continues to creep down, my guess is, again, they're going to lower the gas ceiling. Transaction counts, mega all-time high, briefly down significantly. Some of this is hash rate related. Some of this is just price going sideways related. But to see transaction counts all-time high, to see active addresses in the fill here all-time high, it's hard to be bullish on anything that looks like that, especially if it can sustain these levels. Unlike 2017, 2018, if we can sustain this on-chain activity for months and months and months like we did throughout November to April, right? This was a picture of things to come surrounding the all-time highs, because as long as you have active on-chain activity, people are buying and using Ethereum, they're using it for fees, they're doing all sorts of things, right? So that's incredibly bullish. So what we don't want to see is, if we're bullish, is transactions and active addresses falling off. Average transaction values hit all-time highs with all-time highs in price with volatility. That's to be expected. And in 2017, that actually lasted almost a year of very high on-chain activity notionally. Like I already said, active addresses all-time high, so it's hard to be bearish on that. NVT continues to creep lower and lower and lower, which is actually incredibly bullish because it says there's increasing on-chain activity relative to market cap. NVT is kind of where it was at 2018. I mean, we're just seeing a ton of churn on-chain, a ton of activity notionally still. So it just says there's a lot of use cases, right? If people are using the chain, this is what you want to see on any altcoin that you're a community member of. Just look to these metrics. This is the dream for any up and coming chain. I saw a lot of stats on Matic. Matic's on-chain activity is mooning, and so is price. So that definitely makes sense. If we look at MVRV in the green line here, another one of these inverted metrics of market cap versus on-chain metrics. And previously, during the all-time highs in 2018, MVRV was basically above 2, and it was above 2 in the previous all-time high, a few months prior to that in June 2017, above 2 in 2016, and we briefly got above 2 in May, which was the all-time high. So this is the market cap divided by the realized market cap, which is how much on-chain moves per day. So if we get over double what we're actually moving on-chain in market cap, then that says we're probably topped. So although we're still seeing, insane activity notionally, with backtesting, the metrics still say we need more on-chain activity to support the current market cap, because we risk just being overheated. The opposite is true when we're at these lows, right? We see sub 0.6 really. That looks to be on backtesting kind of where you'd want to buy, a heavy buy zone, where we're seeing way more on-chain activity than we're seeing, in market cap, or 40%, however you want to think about that. But that's where your buy zone wants to be. And if we look at this, we see MVRV above 2 again. It doesn't mean it can't keep going, right? Obviously, it just means historically, be careful up here because this looks overbought. This is ETH exchange reserves. Pretty simple. Supply goes down on exchanges, price goes up. Supply goes up on exchanges, price should go down. And we're seeing that rather quickly here over the past few days. But this initial spike down was mainly led by liquidations, long liquidations. OI, open interest, got culled pretty heavily there. And we saw some increases in exchange reserves. But if exchange reserves drop again or continue to drop, expect this to continue to be bullish. ETH 2.0 staking wallet currently has 5.2 million ETH. And two reasons this would scare the crap out of me. One, this may just be gone forever. They'd likely end up doing another bailout like they did with the DAO hack. Could you imagine if this is like DAO hack 2.0? This wallet gets compromised somehow and they have to fork it again. Or they never switch to proof of stake and they have to fork something again. This is like nightmare doomsday scenario stuff, but it's a possibility. Similar to the exchange reserves, if we're seeing ETH basically squirreled away, untouched, you can't sell it, right? Incredibly bullish for ETH/USD price. So if this goes to 10 million, 15 million, it's going to take a while to get there for sure. But if it does, that's just less float for sale, right? So it's hard not to be bullish when you see that. ETH dApps, just volume-wise, users-wise, completely blowing the pants out of the water of everything, giving centralized exchanges a run for their money in volumes, crushing every single other chain, every ETH killer, nowhere close to users or volume on a 30-day rolling basis. Just massive volume. And not too long ago, this list was full of villainy and scum. It was the Moss Isley of crypto. It was just absolute scams across the board. Now it's a few scams, but mostly legitimate DeFi, gambling, yield farming type stuff. Hex is definitely a scam, but everything else here looks and is legitimate relative to what this list used to look like. So it's a lot of actual decent dApp activity that isn't just gambling scams. Net value locked took a massive hit from 70 billion down to 36. A lot of that is price depreciation. It's stabilized over the past week or so, and we're seeing this W in TVL, which again, it's hard to be bearish when you see W's on anything. W double bottom, that's what you want to see. Most of this in the lending and borrowing stuff, as well as a few DEXs in here, but all of this is the powerhouse DeFi backbone. Something else to watch in the periphery is the ETH Grayscale Premium or discount in general, just as a sentiment indicator. If there's a premium, we're more bullish. If there's a discount, we're more bearish. This is complex. Nobody really knows how it works, to be honest. But there is a lockup involved here with purchases, so you can't really sell. This is why the LTC premium is infinity, because the people who bought that can't sell it yet. They can't sell down the premium. So they're just kind of stuck until they can sell their vested shares, whatever, however you want to think about that. Same thing with BCH, most likely. So to see ETH basically near zero is certainly more bullish than bearish, especially seeing BTC hovering between -10, -20. If we compare the Google Trends for ETH, DeFi, and NFTs, I didn't even realize NFTs almost eclipsed ETH in searches. We saw crazy NFT activity, obviously, earlier in the year in March, but I had no idea. And what we're seeing in a lot of the NFT valuations now is just massive depreciation, right? And we see that on Google Trends as well, whether it's CryptoPunks or Top Shots or any of the other ones, right? Those are certainly taking a big hit from the highs in value, not just because of ETH price depreciation, but lack of interest, or waning interest, I guess you could say. A bit problematic that the ETH Google Trends way down from all-time highs, but that's kind of to be expected. If price begins to creep up again, we should see Google Trends creeping up again. But if we don't see Google Trends creeping up, that's definitely a bit of an issue for price and a bearish divergence. Much like on-chain metrics, you want to see interest following price or matching price. You don't want to see this fall way off and price just sitting at highs, because that's just a recipe for doom. Switching to some technicals, this is the half-year MA down here in the green, 5 times the half-year MA in the red, and this is definitely curve fitted. You can see how it looks. This is the 365, so this is the 1-year MA. We can't look at the 2-year MA because there's just not enough data to really get a good understanding of what's going on. But if we compare the two, The half year we haven't really touched this 5 times half year MA since 2017. Currently it's at 9,000. The 1 year MA is currently at around 53,000. Downside sub 13. So none of these are perfect, but if we get overheated on either of them, obviously it's probably a good time to sell. And if we get way below the MA, it's probably a good time to buy. We got pretty close to the 183 MA the other day on a wick, and historically that has been a decent buy. If we look at Bitfinex open interest, which is at parity basically, longs are equal to shorts nearly. VPVR, RSI volume, yearly pivots, 5200 EMA, and a pitchfork. Everything but the kitchen sink, really. If you're bullish, you want to see volumes pick up again. Throughout most of April, May, volume was kind of flat with price rising, which is certainly not bullish. So we want to see volume rising again like it did into January and throughout January. VPVR doesn't really have much volume support up here. You know, above 1,000 relative to below 1,000, there really hasn't been much activity. So it's always important as a sanity check. You know, yeah, we're at 2,800. Yeah, this looks like it's forming a bullish recovery, but historically, ETH hasn't lived up here. ETH just moved in to the skyscraper on the 90th floor. So it's got some time to, you know, order the furniture and get the perfect light fixtures. You know, you want some activity, some volume in this range, regardless of where price sits, because then it gives people sort of a cushion on the downside, right? We saw all this downside just retraced all the way back to 18, kind of where we consolidated before. Ultimately, the mega bear case is this median line of the pitchfork, which we've been out of since January, really. I don't doubt that we will eventually return to this in a bear market. You know, if we do hit lower lows, if we do break the 200-day moving average, guaranteed we're going to hit this median line. Not saying that we will, I'm just saying if we do, if this then that, that's where we're going. We're still above all the yearly pivots. So on a year basis, we're still doing fine. Trend still looks okay. We bounced on the 200-day moving average here, reclaiming the 50-day moving average. So overall, ETH looks much better than BTC does, even on the cloud. We're still above the cloud. Yes, we have a bearish TK cross, but we can save this still. If we start pulling up into the threes for multiple days, we're going to get a crisscrossing of everything. The TK cross is going to flip back bullish. The cloud's going to go from bearish to bullish. It's currently bullish, but it's probably going to flip bearish in the next few days. And if all of this stuff collectively flips bullish again, that says, okay, game on, right? Just like in October, after July, September, you know, this was the pre-game to the real show. And we have a chance at another bullish rally should we get back into the threes again. Now that may not be a rally to 10K, but it'll be a decent run regardless on high time frames. And as it stands right now, this is what you want to see. We're making higher lows. We're Adam and Eving, Adam and V, Eve U, or W double bottom, however you want to think about that. Volume is declining. We should see a spike in volume once we break 3K. The monthly pivot is at 3K. Horizontal resistance is at 3K. Targets for this are between 36 and 41. 41 is the next monthly pivot. So it's hard to be bearish here. It's really hard to be bearish here. If we keep making higher lows, that says, okay, we pulled back 60%. Market found buyers in that zone, and now the market is continuing to find more buyers. And it looks like fairly quickly, within the next couple of days, we'll have an answer on this. Now we could bounce down, but as long as we continue to make higher lows, we're fine. And if you look at trend metrics on the 4-hour, on the alligator fractal, we flipped bullish a few days ago, and we're breaking bull fractals again. So no matter how you try to slice this, it continues to look like it's ready for a move into the threes. ETH-BTC looks extremely strong as well. Now this could flag out over multiple months. This could ascending triangle. This could slingshot to 0.1 plus. But no matter how you slice this right now, it doesn't look like, it did prior up here, right? It doesn't look like this inverted cup and handle. It doesn't look like inverted Adam and Eve. It doesn't look like diamond top yet. This was a failed diamond bottom reversal that broke down. This looks very strong still. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolios I trade on Enzyme.finance for Techme Capital. how this works is it's a non-custodial portfolio management tool. So you can deposit ETH or USDC into a smart contract, and it gives me the ability to trade those funds. I can't touch the funds. I can't move them out of the smart contract. You have the keys to the funds still, and you can deposit or withdraw, and you can see people doing that. That's one of the great things about this. You can see everything I'm doing all the time. I'm completely naked, exposed to the elements. You can see AUM, performance, allocations, all the trades I make, all of which are done through DEXs. You can see me moving in and out of Aave. Lending, I have the ability to use staking. And we actually closed positive for May, which was quite something considering we pulled back 50 to 60% on ETH and BTC. So I did okay. My track record's decent. But anyway, now if you just want to watch me see what I'm doing, that's fine too. You can just, watch the trades, obviously, follow along on your own. And the DeFi portfolio is less TA related, more just fundamental analysis, honestly. And these are 15 to 20 blue chip DeFi coins with a few others we're keeping an eye on. But again, you can see allocations and the trades I make and when I'm in and out of Aave and that sort of thing. So anyway, that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.